Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, September 11th, 2024. Hope you're having a fantastical day out there in the interwebs. A little gloomy here in Colorado. We got some storms coming across the range, so we're going to have some rain. Tomorrow's going to be hot, so it's cool and rainy today, hot and dry tomorrow. So anyways, hope you're having a great day out there. If you could do me a favor, if you could give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. Let's go ahead and jump into today's numbers and see how things turned out. Looks like things are in the red in this morning. I'm a little surprised to see things jump as much as they did. Dow Jones finished the day in the green, up 0.31%, 124 points, closed at 4861. S&P 500 up 1.04%, 56 points, closed at 5552. NASDAQ up 2.15%, 365 points, closed at 17,391. The VIX was down 7.29% today. It's at 1769. Canada up 0.9, Brazil up 0.27, and Mexico up 0.47. In Europe, Germany was up 0.34%, the UK down 0.15%, France down 0.14%, Netherlands up 0.3%, Spain up 0.67%, Italy down 0.12%, Switzerland down 0.28%, and Portugal up 1.1%. Russian exchanges today were in the red, the MOEX down 0.2%, the RTSI down 0.37%, and the overnights, the Nikkei in Japan was down 1.63%, Australia down 0.3%, New Zealand down 0.18%. In China, the Shanghai was down 0.82%. The Shenzhen component was up 0.39%, China A50 down 0.59%, DJ Shanghai down 0.48%, Hang Seng down 0.73%, and the Taiwan weighted down 0.38%. All right, so those are the markets for today. Again, it is a little odd. Let me go here to my minute chart. Yeah, let's bring this up on the screen here. Yeah, this was the Dow. It opened up down as bad as about 1.75% down. And then it took the long march, kind of like the little mountain climber on, what was that? Price is Right. And yuli, just kept going back up. NASDAQ, same thing, opened down, was down about 1 1/3. And we know obviously it was up 2%. And same thing with the S&P 500 down about 1.5%, and then finished up 1%. So again, really strange. I mean, the only thing I can assume is that the CPI data looked in line, according to the smart people out there with what they wanted. So I guess they're assuming that the Fed's going to, definitely cut rates next week. And I think a lot of people are hoping it's going to be a half a percent. All right, let's get to the market recap. U.S. stocks bounced back. Treasury yields steady after CPI and the debate. Yeah, that was riveting. I didn't watch it. I personally don't care. I got enough of the tidbits from everybody else. All right. On Wednesday, Wall Street stocks reversed an earlier sell-off driven by tech stocks and a rebound in Brent crude prices as a key inflation report solidified expectations of a 25 basis point rate cut from the Federal Reserve. The CPI, or the Consumer Price Index, showed a drop in an annual inflation rate to only 2.5%. So it's 25% higher than what they'd like. Cooler than expected, but core inflation, which excludes food and energy, which no one ever uses, posted a 0.3% monthly increase and a 3.2% annualized gain. The mixed inflation data caused some uncertainty, but investors largely expect a modest 25 basis point cut rather than the more aggressive 50 basis point reduction. The CME's FedWatch tool indicated an 87% chance probability of the smaller cut. Tech stocks, particularly chip makers, led the rally, with NASDAQ outperforming other indices. Investors also focused on the U.S. presidential debate between Vice President Kamala Harris and former President Donald Trump, looking for potential policy shifts ahead of the November election. I think that was just mostly mudslinging and calling each other names. But, I mean, personally, I don't think either one of them are going to do anything because, if you look back at the Trump administration, what was really different? There were new wars, but there was still war. We were spending a lot of money on military overseas. He had the bump stock ban, which was bad. Obviously, the whole COVID that he had to deal with in 2020 was a complete disaster. Granted, he didn't force anyone to shut anything down, but he could have said, hey, states, I don't think this is a big deal. Leave it alone. protect yourself as best as you can. So, I mean, there's just a bunch of things. I mean, if anyone thinks that the world's going to fall apart if he gets elected, is has other problems. I mean, in that case, I mean, personally, I think Kamala's an idiot. But I mean, either way, the deep state runs things. All right. In Europe, stocks were flat as attention turned to the Europe Central Bank's upcoming rate decision, while Asian markets closed lower. U.S. Treasury yields steadied after an earlier slump, with the 10-year note yielding 3.66%. The dollar strengthened slightly against global currencies, and oil prices rebounded following a drop in U.S. crude inventories and supply concerns due to Hurricane Francine. So you folks down there along the Gulf Coast, be careful. Crude rose 2.37% to $67.31 a barrel, while Brent climbed 2.05% to $70.61. Gold prices dipped 0.2% to $25.12 per ounce as expectations for a larger Fed rate cut diminished. All right. Let's dive into some of the CPI data. This comes to us via our friends at First Trust. Mr. Nate Gurzy, economic analyst, put this report together for the August CPI. All right. Headline inflation in August matched expectations, reinforcing the likelihood of a Federal Reserve rate cut at next week's meeting. After initial progress against inflation from mid-22 to mid-23, inflation pressure surged again in early 24. However, inflation now appears to be a downward trend, with consumer prices rising just 2.5% in the past year, the lowest since the inflation spike in 2021. The Fed's tighter monetary policy, particularly the reduction in the M2 money supply since its peak in 22, is believed to be contributing to this improvement. Despite the positive headline inflation data, underlying inflationary pressures remain. Energy prices fell 0.8% in August and are down 4% over the past year, helping to suppress overall inflation. Excluding energy, consumer prices increased 3% year on year. Core inflation, which excludes both food and energy, rose by 0.3% in August, with a 3.2% annual increase. Additionally, supercore inflation, a key Fed measure excluding food, energy, goods, and housing rents, rose by 4.5% year over year. So again, on the surface, it looks pretty good at 2.5%. But when you start digging down into the more segmented aspects of the economy, it is still quite hot at 4.5%. While rate cuts are expected, the Fed is likely to proceed cautiously with a gradual 0.25% reductions at each of the three remaining 2024 meetings. Inflation is still above the Fed's 2% target, and overly aggressive easing could risk a resurgence of inflation. So Mr. Gurzy seems to think that they're going to do quarter point rate reductions at the meeting September, the November 6th and 7th meeting, and then the December 17th and 18th meeting. So we shall see. There's a lot of time between now and then. All right, next up, from Zero Hedge, core inflation comes in hotter than expected as shelter costs unexpectedly rise. This comes to us via Zero Hedge. All right, the latest CPI report revealed that core inflation, excluding food and energy, came in hotter than expected, rising by 0.3% month over month and surpassing the forecasted 0.2%. While headline CPI was in line with expectations at 0.2% monthly and 2.5% year over year, core inflation's persistence, particularly in housing and transportation services, is raising concerns about the Federal Reserve's upcoming rate cut decisions. This marks the 51st consecutive month of core inflation increases. Shelter prices, a key component of core inflation, rose at 0.5%, signaling the first acceleration since early 2023. Owner's equivalent rent also increased at a similar rate, despite used car prices declining and energy prices falling. Other categories like airline fares surged by 3.9%, contributing to the elevated core CPI reading. While rent inflation flatlined, shelter inflation posted a notable uptick, increasing concerns over whether the Federal Reserve can afford to begin cutting rates at its next meeting. Supercore CPI, which includes services but excludes food, energy, and housing, also saw its largest monthly increase since April. Following the CPI report, the odds of a larger 50 basis point rate cut dropped to 30%, or from 30 to 20%, reflecting the market's uncertainty about how aggressive the Fed will be with its monetary policy amid persistent inflationary pressures in key sectors like housing and transportation. So again, here's another person's take that, maybe they're cutting rates too soon because, within the supercore, inflation is still really, really, really hot. So, even the guys at First Trust have a lot of faith in. I mean, they're some of the people I really value their opinions. They don't, they're never too hot. They're never too cold. They usually look at things from a fairly even keel level. So, but again, that just shows, and Zero Hedge is pretty conservative in their news takes. So, if they're like, again, just giving you both sides of the argument there. All right, one last article here from Mises Wire. Is GDP an accurate measure of reality? This was written by Frank Shostak. We hear about GDP all the time, and does it really actually measure anything of any importance? All right, the gross domestic product is a commonly used statistic to assess the health of the economy, but it has significant limitations. GDP measures the value of final goods and services produced in a given period, focusing on consumption rather than the production process. The consumption-driven approach ignores the various stages of production and the role of real savings, which are essential for sustaining production and future economic growth. GDP assumes that goods emerge solely because of consumer demand, but in reality, production requires savings and resources. The calculation of GDP, particularly real GDP, relies on aggregating desperate goods and services, which is problematic as it is impossible to establish a meaningful average price for different items. This makes GDP calculations, especially price indices and deflators, arbitrary and unreliable. The concept of GDP gives the illusion that the economy is an independent entity, but wealth is actually produced by individuals, not by an abstract economy. Moreover, GDP growth often mirrors fluctuations in the money supply rather than genuine economic progress. This creates economic booms driven by inflationary monetary policies, which weaken true wealth formation and lead to harmful boom-bust cycles. In conclusion, GDP is a flawed measure. A flawed measurement that provides little meaningful information about real economic conditions. While it is used by governments and central banks to justify their interventionist policies, its fluctuations often reflect monetary manipulation rather than actual prosperity. Economic growth, as portrayed by GDP, is often detached from the realities of wealth creation. I'd say that's true. I mean, oftentimes these economists, eggheads, they get so wrapped up into their formulas and calculations that they don't actually take a step back and look at the big picture of, who wants tacos? I mean, seriously, that's, people eat tacos because they want tacos. And, you open up a taco truck and people will show up and eat your tacos. Granted, again, that's where it takes savings and investment to buy the truck, buy the materials, buy the food, make it, pay yourself so you can afford to live while you're, building up this business, and then you sell all your tacos and make a little profit off of it. So, anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. All right. Well, I hope everyone has a wonderful evening, and I shall talk to all y'all again next time. Adios.